In the equity quadrant, taking a look at the September S&P futures, which rallied for a third straight day in unimpressive fashion. And what I mean by unimpressive is those 3 consecutive sessions only resulted in about a 2.15% gain, including today from the close on September 6th. Today, however, was clearly the best of those 3 sessions, as we had a nice move off of a lower low and a positive close after having been down over 1.5%. Also, the volume was strong today. It's initial volume, not official volume, but if it matches it when it comes out as official volume, it's the second largest volume day of the last 5 sessions. The low today, 54.12, that was down 1.67%, so actually almost 1 2/3% lower. But the high today, and there is a little bit of time left in the session, 55.41 is up 2/3%. And again, with a little time left in the session, we are still up about 0.42%. So it's almost a 2% swing from the lows to where we're closing out today, and there's some time left. Volatility today spiked to a 3-day high and then dropped off to a 3-day low, reflecting the move in the equity markets overall. The lows in the S&P today happened after the initial release of CPI, which ended up a little hotter than expected. And that also is when volatility spiked, under the assumption that the slightly hotter than expected CPI would be taken poorly by markets. And indeed, we did have a double-digit swing in short-term yields. In the Treasury curve, the 2-year was down 4, it went to up 7, and it's kind of holding that gain right now. But the probability of the 25 basis point rate cut by the Fed is now the highest of the rate expectations, and it's at the highest level in terms of probability in over a month, 84.4%. So that's viewed as more of a sort of slow and steady rate cut cycle, which ended up feeling better for the equity markets by the end of the trading day.